Good morning, Wall Street winners. It is Tuesday, April 22nd, and the market narrative has shifted once again. Like a storm that passed in the night, the conversation around Jerome Powell has subsided, and markets and future markets have turned green heading into the morning session. We're about 90 minutes out. What is interesting is there is an article on the Bloomberg about the biggest or the quietest market sell-off and the number of big days that continue to pile up. And if you scroll down through this, there's an interesting chart. And what this chart tells us is it looks at the S&P 500 and where it has had a move of more than 2% up or down. And that's been more than once a week. So this chart helps to support our current strategy of using put and call options and buying puts when we have a really positive day or when stocks are in the green, and then counting on them coming down below those levels in the next coming days. Or like yesterday when we had a terrible day and everything declined and was in the red, towards the end of the day, buying call options, hoping that things will correct and move forward. And that was a strategy that I've been talking about for the last probably a couple of months now, that has worked really well on a market index. More risky when you do it on an individual stock, but on a market index, it's a little less risky, and it has to do with options trading. So that's kind of where we are today. If we look at any big news, there's nothing coming out of the news media that's really moving the markets at this point. It's still all about tariffs, all about the cost of goods, all about inflation. There's a lot of ongoing multiple conversations, but kind of along the same threads there. If we take a look at the markets and the futures, you can see here that all three of the US indices are in the green and looking like they're about to make a bit of a recovery. I mean, they were down 2 and 3% yesterday, so they have to certainly go up a great deal more than they are now in order to recover from yesterday's losses. But they are in the green and working their way up. And then if we flip over to the Yahoo Finance app, you can see here that crude was up over $1. It's now up 84 cents. We do have some results coming out, probably 10 or 11 minutes if they're not out already, from Halliburton, one of the first oil companies to report. So we'll get some insight into what's going on there in terms of profitability. And then as we scroll over, we've got the VIX, which is dropped down in the low 30s. Still, in my opinion, after yesterday, we should be up into the high 30s or 40s. So that seems to be a bit of a lagging indicator these days. Looking at health and retail, had a pretty bad day yesterday, but looking like it's going to recover. Some of these stocks started off bad and recovered towards the end of the day, but a bit of a mixed bag there in retail. You've got healthcare, which was off yesterday, slightly in the green today. Transport, which has just been in the tank, primarily due to the trade war that's going on and the likelihood that shipping and transportation will be impacted significantly, and it's already started to see that. And then we've got oil. Oil took a beating yesterday, as did utilities, oddly enough. One utility making a big jump today is Con Ed. As you can see, it's up almost 3.5% in early market trading. Doesn't have earnings for another 9 days. There's no real news around that. So that's peculiar. And then you have others like Valero up $4.35 today. That's a big move. Earnings in a couple of days on Valero, but nothing new to report right now to really justify that. Even a crude move of 84 cents. I'm not sure what's driving that up, but a lot of green in the oil sector. Get down to tech, it's still a bit of a mixed bag. More green than red, but some anomalies that stick out. Let's see if it's still here. Earlier this morning, if we take a look for Workday was up $29 in the pre-market. We'll see whether that stuck. That seemed like it was a definite anomaly in the pre-market. I'm not sure what here. Now it's down, or it's only up $2.31. But this was a stock, there you can see the spike in the chart. It was up almost $30 in the pre-market for some reason. I'm not sure what drove that, but that may have just been an erroneous trade entry. Scrolling down further, taking a look at Tesla. Tesla's making a bit of a recovery. Tesla is one that reports later this afternoon after market close. Elon is going to have to pull a rabbit out of a hat on this one to keep this company's stock from plummeting. It's not impossible. The man does that. There's no question about it. He is quite a brilliant individual, and a bit of a master manipulator. So we'll have to see what he is going to talk about. Hopefully he'll be on the earnings call. Netflix is making some positive moves. I expect this stock will do pretty well into the coming quarter, based on its last quarterly results that came out last Thursday. Meta's gaining back a little bit of the losses, but not nearly as much as it needs to. I mean, down in the 480s, this was a stock selling in the mid 600s only a couple of months ago, and probably one of the least affected by tariffs out of the Mag 7. And then you've also got the court case going on with Meta, so that's probably dragging it down. And then another antitrust case with Google at the same time, impacting it. We do get Alphabet results or Google results later this week, Thursday after market close. TSM, I mean, this is the manufacturer for the high-end chips from high-end companies. Really, the only competition, Intel. Intel's in the tank, not doing that well. It really holds all the market share here in this space, that and maybe Samsung, and it is just getting crushed, even though there's still significant demand for these chips. We are seeing data center demand or data center growth, new data center growth, starting to drop off. Amazon yesterday released an article saying that it was looking to cut back on its data center capital expenditures. Didn't really get into a lot of details on that, but that is a bit of a concern for chip stocks and chip manufacturers. There still should be a significant amount of demand there to support that stock going forward, at least into the next quarter. And then you've got the financials. So it looks like a bit of a rebound here in the financial sector. They were hit pretty hard yesterday, almost everything in the green there. Goldman making a slight comeback. The one to report this week is Raymond James. So if we take a look at Raymond James Financial, why am I not seeing that? There it is. It sold off and was down in the 130s, 129s yesterday. I think it might be an interesting pickup going into earnings. I think it'll do well, similar to Charles Schwab because of the similar business model. So that's where we are today. It looks like we're in for a bit of a recovery. You could get in early and buy a call option and see if that index, the S&P 500, the NASDAQ, the QQQ, whatever index it is you're looking at, or ETF, continues to move forward and profit off of that. You could look at individual stocks. If you are, I'd look at ones that have had positive earnings and pulled back. That could be like a Goldman, a JP Morgan, a Morgan Stanley, or on the tech side, maybe a Netflix. If you're looking for something short or a put option, I'd be looking at things like Tesla, and then wait for a few minutes and see what comes out with Halliburton when they announced this morning. Good luck in your trades today, and if you're liking the videos, please hit the like and subscribe.